If you've ever felt financially strained or found yourself with no extra money at the end of the month, take a close look at your car expenses. It might seem insignificant compared to your overall spending, but the reality is that your car could be the primary factor holding you back from financial comfort. Today we'll explore why your car might be such a major detriment to your finances. Welcome to Budget Boosters, where we simplify finance and make it easy to understand. Our mission is to provide you with effective finance tips that will boost your budget and help you secure a brighter financial future. Whether you're interested in personal finance, investing, or just looking to expand your knowledge about money, be sure to subscribe to our channel and hit the like button if you find this video helpful. Let's work together to boost your budget and take control of your financial destiny. Almost everyone loves a shiny car with that new car smell and all the latest features. An expensive car can seem like a symbol of wealth and success, but in reality, most people driving those cars are in debt and have spent more than they should have. With the average new car payment at $716 per month and the average used car payment at $526 per month, according to Bankrate, these figures may not be suitable for the average budget. It's quite common for people to overspend on cars, leaving them with little or no extra money. The monthly car payment is so substantial that it overshadows other expenses, leaving nothing for savings, leisure, or investments like buying a home. Rather than allocating a significant percentage of their income to transportation costs, individuals should focus on more essential expenses and prioritize financial stability. Consider this. If you drive your car for 1 hour daily, it's parked 96% of the time. That's an expensive decoration. Most people finance cars instead of paying cash because they can't afford to buy them outright. However, there are hidden costs involved, such as interest rates determined by your credit, income, and other factors, which can have a significant impact on the overall cost of car ownership. The average interest rate on a new car is about 6%, while on a used car loan, it's about 10%, according to NerdWallet. Borrowing $35,000 for a used car for 60 months at a 10% interest rate will result in approximately $9,600 spent on interest alone. Although this may not seem significant in the short term, it adds up over time, especially when considering the opportunity cost. Even with good credit, you'll still be spending thousands of dollars on interest payments. Borrowing money to buy a car is not only costly in terms of interest but also because you're buying a depreciating asset. The more you spend on a car, the more it will depreciate while you own it. When you buy a used car, the first owner absorbs the most significant depreciation hit. Depreciation depends on various factors such as miles driven, the car brand, and its condition. However, a new car typically loses about half its value within 3 years. With the average new car price at around $50,000, according to Kelley Blue Book, that car will only be worth about $25,000 in 3 years, meaning it depreciates almost $700 per month. Even with a 40% depreciation in the first 3 years, you'll still lose $20,000 or $555 per month. There are also sales taxes to consider, which will further add to the cost. Insurance costs are also generally higher for newer cars. Despite having more advanced safety features, the car's value plays a significant role in determining the cost. The more expensive the car, the more it will cost to replace, which insurance companies take into account when setting premiums. Owning a car always comes with some expenses, whether it's depreciation, maintenance, or insurance costs. The key is to find a balance that allows you to own a reliable vehicle while minimizing these costs. Buying a used car can be an effective way to reduce ownership costs, but it's important not to buy a poorly maintained vehicle that will cost more in the long run due to frequent repairs. Instead, opt for a car that has already experienced a significant amount of depreciation but still has several years of life left before maintenance issues arise. By choosing a good used car, you'll save on interest, depreciation, insurance, and taxes, even though you may face higher maintenance costs. However, the overall savings could still be substantial, potentially around $600 per month. Investing the money saved by not buying a new, expensive car every few years can accumulate over time. By purchasing a reliable used car and saving $600 per month, You could invest that amount into the S&P 500 and potentially earn an average return of 10% per year. Over a 40-year career, after adjusting for a 3% inflation rate and increasing contributions with inflation, you'd have nearly $1.4 million. While 40 years is a long period, and there are many variables in this example, it's worth comparing this to the alternative of spending an additional $600 per month just for the sake of driving a luxurious car. The money saved can also be invested in other ways, such as family vacations, home improvements, or paying off your mortgage. For some, the enjoyment of driving expensive cars may justify the financial sacrifice. However, for most people, analyzing the situation objectively will reveal that spending large amounts on cars is a waste of money. If you find yourself buying new cars every few years to appear wealthy or because it's what everyone else does, it might be time to reevaluate your priorities and consider why you place so much importance on appearing affluent. Don't succumb to peer pressure to buy a new car just because others do. A fancy car might make people appear rich, but behind the scenes, many are drowning in car payments. It's essential to ask yourself whether making sacrifices in other aspects of your life for the sake of owning an expensive car is truly worth it. Remember, prioritizing financial stability and investing in your future will always be more valuable than the fleeting satisfaction of driving the latest luxury car. By focusing on your long-term financial goals, you can secure a comfortable lifestyle and achieve genuine financial success.